FuboTV topped earnings this past week and saw shares gap higher, but only to close down lower. Let's get into this article by investing.com before we continue with the chart analysis. So FuboTV tops estimates despite challenged ad market. The TV streaming service reported a loss per share of 17 cents, 12 cents better than the analyst estimates of a loss of 29 cents per share in the quarter. Meanwhile, revenue came in at $313 million versus the consensus estimate of $302 million. The company delivered ad revenue in North America of $23 million in the second quarter, up 5% year over year, with FUBO stating it marks an expected return to growth despite a challenged advertising market. Dan Gantler, co-founder and CEO of FUBO, stated the following: "We are encouraged with our execution in the first half of the year, including posting year-over-year double-digit revenue and subscriber growth in the second quarter while meaningfully reducing our net loss by $41 million. Looking ahead to Q3, in North America in particular, FUBO is projecting 1.327 million to 1.347 million paid subscribers, representing a 9% year-over-year growth, and revenue of 273 million to 278 million, representing a 25% year-over-year growth. Company is also raising its full year 2023 guidance for North America and now sees paid subscribers increasing by 1.567 million to 1.585 million, representing a 9% year-over-year growth, with revenue coming in at 1.26 billion to 1.28 billion, which would be a potential 29% increase. So it sounds like FuboTV had a great earning. So, the question is, why did price gap higher only to sell off? Let's look at this video in which the CEO talks about their Q2 earnings before we get back to the charts.
Yeah, well, I think it's all the above. The company had a very clean print. As you said, we grew revenues up over 40%. We grew subscribers over 20%. We increased our average revenue per user by 13%. Ad revenue increased by about 5% year over year. So across the board, I think we've operated very well. And also, we've been very measured and disciplined as it relates to our cost structure. As you can see from our bottom line, we've improved by about $40 million. So everything that the team has been focused on over the last 6 months is certainly starting to come to fruition.
Let's talk about the FIFA Women's World Cup. How is that driving things for you right now?
Yeah, well, as you know, our DNA is soccer. We launched FUBO as a football or soccer platform. Women's World Cup is performing quite well. We're starting to see increasing traction, double-digit traction as the tournament progresses. And as you know, we're still sort of, I would say, relatively early in the tournament. And so we're looking forward to continuing to drive viewership for the Women's World Cup and, of course, the U.S. Women's national team.
We've discussed here on Bloomberg Technology, frankly, like turmoil in sports TV. The industry faces a lot of long-term questions on profitability, but also cultural, technological questions. Outline for me, David, how you see people consuming sports in the future, the platforms, the devices.
Yeah, I think you hit the nail on the head. It's a very, very complicated industry with media companies and physical platforms, sticks like Roku and Amazon. And then you have companies like FUBO, which are software-based, platform-agnostic, that allow people to move from device to device in any room in the house seamlessly, giving them access to their favorite teams and other content through one single app. So I think we're positioned for growth in a space where you're going to see, I would say, significant competition from the likes of connected TV players that you're very familiar with, like Amazon and
Yes.
Roku. But at the same time, you see the increase in competition from manufacturers like Samsung and Vizio. So we think that we're going to continue to increase the leverage that we have because we are driving significant eyeballs across all of these platforms. And, again, we're aggregating content for consumers and making sure that they're able to remove a lot of the friction and fragmentation that they have to deal with on a daily basis.
David, to what extent does cable regional sports networks die?
Well, as you know, we have differentiated versus other platforms in the United States due to our sort of, I would say, our local footprint. We believe that there is a primacy in sports, and more so even in local sports, which has been a really strong driver of viewership for us. But, we have a great relationship with Diamond Sports, which controls the majority of the regional sports networks. But at the same time, we've continued to build solid relationships with the league, particularly with Major League Baseball, given that we're in season. And we've also made a number of marketing announcements with teams across basketball and baseball to continue to drive more awareness for their video product on our platform. So, at the moment, we're confident in both those directions.
David, quickly, the virtual cable bundle isn't working for anyone else. It is for you. What's your secret?
I always like to say it comes down to product. I think we do a really good job surfacing a lot of the content that people like. We do it in a very premium user experience. And, historically, we've been known for really spending a lot of time developing innovative features. And, we've been first to market on things like 4K and multi-view, which is now something that other services, including Apple, has now launched. Actually, I think it was weeks ago that they begun to roll that out. But now we're focused on video AI features and being able to really tap into the most exciting moments in a very personalized way in a discrete fashion for each of our users. So that's sort of the area where I think we'll continue to focus.
All right, so let's look at the charts on FuboTV. We're going to start with the monthly chart. And the good news, although you did have a sell-off on earnings, is that last month price did close above the 13 simple monthly moving average and has bottomed as well, which is a positive sign for the bulls. Although at the moment you have this inverse hammer candle to begin the month of August. Now looking at the charts, I see a bunch of selling wicks and a bunch of buying wicks. So rightfully so, price did sell off as price came to what I'm calling was a resistance support line at the $4 level. Let's scroll down to the weekly chart. And again, another bullish sign. We have the 13 crossing over the 26-week moving average. Again, another bullish sign for the bulls. And in beginning of July, you see this green extended range candle, which signifies buyers stepping in at the roughly $2 level. Let's go down to the daily chart. I want to examine that level at $2. And as you can see, back in May, early May, when they announced earnings, we had a gap up higher in price, followed by another gap. And so this is kind of where volume started kicking in. Again, another bullish sign. You have the golden cross, which signifies where the 50-day moving average crosses over the 200-day moving average. So a lot of bullishness in the stock. Now, I want to hone in on two things. You did have this daily bias level at about 250. Let's put this in here to go over the quick lesson. at 250. All right, so the reason that price penetrated the zone and even breached it was because the level here, when it gapped higher, the leg out candles did not close above the most recent pivot high. The better setup would have been if price gaps higher, closes above, and then pulls back. This would have been more of a sure of a bet to go long. Nevertheless, it worked out. So again, on earnings, price gapped higher just to close lower. Potentially prices continue to move down, filling the gap at 280. Nevertheless, FUBO is in an uptrend. Look for a first target at the $4 level. Just looking at current price and going up and to the left. Once we get to the $4 level, look for a next target at $5, where you have this pivot high waiting for price. Thanks for watching. Subscribe. Please like the video.